JB here, JB here. Hope you're doing outstanding. January 7th, 328 on this fine Tuesday. Talk really quick about the market, some names I'm looking at, go from there. Take a look at the S&P. Market's down, and we're actually looking pretty good today. And then we had the November JOLTS report come out, and it shocked the markets, right? We'll see yields rose, the dollar rose. It's funny, it's it's a backward looking number, but it kind of adds to the narrative that the economy is very strong and the Fed's not going to cut rates anytime soon again, right? So already you have the probability of rate cuts getting ratcheted back even more for this year, and it's just leads on that. It just continues to add to that hawkish spin that Fed Chair Powell had at the last Fed statement and press conference. So we'll find out Fed minutes tomorrow at 2 o'clock. That'll kind of add support to the hawkish spin, or maybe we find some support here, but not a good thing. The SPY was hanging around that 50-day moving average till the 2 o'clock hour, chopping around, and then we just broke through. And then I'm looking for names to do hedges on, and a lot of the meat is kind of off the, well, I wouldn't say off the bone, but I'm looking at some of the typical names I would play is like I would look at Broadcom just because of the move it's had, and not saying that's not going to be higher in the coming weeks or months, but always opportunities on these pulls, and it's been sitting around 230, 229. So any put positions, pretty much premiums have just come out or continue to come out. I was looking at Shopify, same kind of situation when I had those calls, and it's unless I got the calls at the start of the day, tough one, and it had an upgrade this morning. So it is down nearly 6%, but those are names I'm looking at. So I'll just kind of just look at the names I'm holding, and if we have some more breaks of support tomorrow, maybe I'll look for some hedges. Because the concern here would be that if we start breaking the lows we saw back at end of December, and then a couple days ago to start the new year, then uh, maybe we have another pull here, 575 or so on the SPY. So that's kind of what I'm looking at. Also, the amount of stocks trading over their 50-day moving average still stubbornly low. Is only 23% of the names on the S&P trading over their 50-day moving average, which again, the longer this goes on, it's more of a trend, right? So the trend is probably to the downside. I'm not throwing my hat in yet, or I always say put my bear suit on yet, but certainly some things to watch. And not saying to tell. Yesterday afternoon while I was on the rant I was talking about in the video, and of course, in hindsight, of course, getting puts at the open would have been a great trade, but it was gapping, and great keynote speech by Jensen and Nvidia, and just kind of speaks to all those possible new avenues of growth, the robotics side, the autonomous driving things, which we've all known about that. So that's the overall market. We'll see what happens. I'm looking at Intuit, but it's moving slow. It's down nearly 2% here. It's under its 200-day moving average. But then I start looking at the risk reward on the put side, and I would have to get some closer dated strikes just to have a decent, decent risk reward. And then if I do go this week, the weekly 580s or 585s, it's a tough one, and all it's going to take a little bounce, and those will be crushed. So I'd rather just sit on my hands for now. And not only that. It looks like TLT is reversing here, so maybe yields start to go down. And then the Fed minutes, maybe that's a spark. And also, don't forget, we have markets are closed on Thursday. So certainly interesting. I think the last time markets were closed, I think it was Hurricane Sandy, and the markets were closed for 2 days for flooding in New York City. I think that was the last time we've had a situation like that. But that was a surprise. Anybody who was around that, I think I was in Netflix calls at the time, and it of course it wasn't baked in the options, so you're screwed because premium's going to erode and you can't close them, right? So stories for other days. All right, so that's the overall market. So definitely some things I'm watching. We're right here, 587 on the SPY. So you start looking at levels that we traded over the last couple sessions on the SPY. We hit lows of 586 on Friday, 586.43, and then that 584 handle was Christmas Eve. Oh yeah, New Year's Eve and the Monday before. So those will be 584 and 586. Those are the next two spots. Hopefully we don't get to that before the close here on the SPY. So that's the overall market. So then individual names, and I guess if there's a silver lining, some of the names I'm trading or have been holding up, and SolarEdge actually just took a little leg to the down, another leg to the downside, but still in the green. But take a look at SolarEdge, another nice session here today. We had multiple price target upgrades from Canaccord, Goldman Spectacular, Wells Fargo, and hopefully that kind of just starts the trend of, hey, this is a bottom in the name. They're starting to rework their debt, or at least solutions to get that debt overhang reduced. And then if we do get a return to rates at least starting to flatline or go down, and a return to growth in the solar sector should bode well. At the same time, it's sitting here at eight. It was sitting there in the 18s. I didn't want to be in a spot where I lost more of my profits, so I locked some more of my calls in for a nearly 500%, and then I just held the rest. And in lieu of adding more strikes, I'll just be patient, and then I'll just hold the rest of my strikes for now. Probably, we'll see how today pans out until tomorrow, but I think it continues to head up, especially if we have a bounce tomorrow. So really like the SolarEdge story. I was making sarcastic remarks around the windmill situation, that it's net solar. I just think it's in a good spot here. And First Solar was doing well here today. It's up 2.8%. So I don't know if that's just on the wings of SolarEdge, or maybe that sector starts to rebound. At SolarEdge, TripAdvisor finally showed some life. It was sitting there at the noon hour. It's like people came back from lunch, and all of a sudden it took off from 1510 to nearly 1560. Multi-month highs. It's hanging here at 1546. Still looking to get some strikes out of my January strikes out. I was trying to get some out today. I'll probably, we got 26 minutes to the close. I'll probably just hold on to the Januaries for now, but certainly looks ready to start to break into the 17 and change area in the coming days. You look at the long-term chart, certainly looks pretty stellar here. I think it's 1, 2, 3, 4, 5, 6, 7, 8, 9 of the past 10 sessions to the upside. And of course, I would love to see it rocket to 17, but it's been a slow and steady move, which a lot of times bode well for pullbacks, right? If we do have a pullback, we're probably of shallow nature. And here's the market doing a little more pull. Come on, holes. We need some Hodor. Okay, so then a ROKU this morning, and of course I had it on the watch list. So as I'm typing out the watch list, because it was the name I was looking at, especially with the news with Disney, Hulu, Hulu Plus Live, and things like that, I thought it just bode well for that whole sector. And take a look at ROKU. It's been trading right around that 80 handle for quite some time. I thought it was going to be one of those names. Hey, here it's ready to start to take off again. And then sure enough, at 8:45, it comes out with some news, 90 million users. And then you also had Needham announcing it as a 2025 top pick. So sure enough, it gaps at the open. I still have the January hundreds. Didn't want to be in a spot where it continued to run. So I added some more January strikes, and then it was on a death spin ever since. Still bullish name. At some point, maybe there's some M&A, and that was some of the move at the end of in December on reports that, hey, it's a target. I think there's this theme, and so you have this. It's like what's happened over time in every sector. It seems like everybody finds an opportunity, and this time it's with a la carte services. Right back when Netflix was the only one doing it, then you have all these other streamers that came out. You have the Paramount Plus, the Apple Plus, Amazon Prime. I can go down the list. The Max, the HBO Max, what it used to be, the Peacocks. So they're all trying to get into this niche, big segment that was a huge opportunity. And Siri's talking. And sorry about that. And now it's like, okay, it's reached that saturation point, and now it's consolidation time. So I have to think that it just bodes well for ROKU. But rants for other days, of course, the SPY's starting to melt even more. Hopefully find some bids here at the end of the day. All right, so that's TripAdvisor, that's ROKU. Still bullish that name. You look long term. Intuit, like I was just saying before, it's slow and steady to the downside under its 200-day moving average solidly. I talked about it early a couple months ago that especially with the new administration, there's going to be some disruption in the way taxes are done, performed, filed, you name it, right? And not that Intuit is all about tax anymore. They have QuickBooks and other avenues of growth and revenue drivers, but I think it does 25 or so percent of their revenues. Just have to think some of that's disrupted, and especially a name that was at all, priced for perfection. Any kind of nick in that growth story, fundamental story, it's an opportunity. So I'll see. We got 20 minutes to the close. Maybe I'll look to get those at least some puts, at least just in case we get a gap tomorrow. Teladoc was looking great this morning, all the way up to, I think it did 1060 on that January effect kind of move. Did it get to 1060? 1061 right after the open, and then it's just been a melt ever since. It's just raring to go. And at one of those times the gains hold, it'll be off to the races. The February strikes gave me some time there. And then iRobot, still watching that one. I almost pulled the trigger again this morning. It's just sitting here at 1220. I think it's just a matter of time that one breaks out. And I was saying it before, I can make the bull case that it's over $20. So of just on its core business already, not to mention the possible removal of some regulations, folks doing more M&A on the hopes that there won't be the FTC going after monopolies like they've been doing in the past. I think that's hurt a lot, folks, because when people do M&As, it's not like Amazon goes to acquire a company. It doesn't cost any money. There's lawyer fees, file all these fees that go into it, and then the breakup fees. So when you want to go and acquire a company and you think there's a possibility that this might get nixed by some kind of regulatory, by the FTC or the EU or what have you, there's a lot of risk involved. It's costly. So not so you have a lot of risk to do acquisitions. So it kind of removes the the reason to do it, right? Because you wanted synergies. You want to acquire a company, have synergies, save money, make more money. But when it costs so much to do it, it's almost like, why do it then? So anyway, that's rants for now, folks. I'll try. Well, I'm not going to be on audio later, but probably I might look into it if we don't find a bounce here. It looks like 587 could be a bounce. Maybe we start to bounce back. 589 or so would be nice. And that's it, folks. Have a great day. Rock and roll.